What's up, everybody, and welcome back to class 7. Last class we talked about order blocks. Now we're going to talk about a different variation of order blocks, which is called a mitigation candle. So let's talk about it. A mitigation candle is an area where the institution is actually taking profits as the market is being pushed in a specific direction. So as you see here, market is selling down. Okay. Here we have a bullish candle buying up, and then continuation of sells engulfing that and pushing it back down. Now, what's happening here is that the institutions and big money is actually buying in. Okay. Now, to get out of their buys, they have to sell. Okay. So now they put in all their sells up here. So this is the strongest area of resistance right here. They then went ahead and sold everything down, and as price was coming down, and as we trade, we have take profits. You know, we have to take some money off the table as we were in profits. We can't just let it all flow. But this is what it looks like when big players take profits, okay? Because for them to get out of the sell, they have to buy, okay? But their overall direction is down. So up here, after they took profits, they went ahead and put on more sells to then sell back down, which is then mitigating this complete bullish movement here, okay? Now the way to be able to find this is by seeing a direction, like a price moving in a direction, all right, and then you're going to see a opposing candle, because this can happen if price is moving up, and then you see a bearish candle and then bullish engulfment again, okay. But you're going to see price moving in one direction and a solo candle, or even a variation of a bullish movement, and then more bullish engulfment, more bearish engulfment from there, okay. So when you're looking at these mitigation levels, there are some things that are going to happen again, because once again, this is a level that they're using within their algorithm for different reasons, whether that be to add on or to take profits. That's all they can ever do. They can either add on or take off, one of the two. So when we see price come back to this level, we can expect something to happen, whether it be a reversal or a mitigation, meaning that, you know, them taking profits. So if we're trading and we're coming up to this mitigation zone right here, it's a good idea to take profits. That's just flat out, because something is going to happen. It's like a speed bump, okay? Something is going to happen in that area. There are times where, you know, there can be enough volume to just completely push market back through, but when it does that and it doesn't make that mitigation, it more than likely leaves a fair value gap, which is still a target of retracement. But we'll talk about that more in a later on lesson. Now, mitigation candles, like I said, they often repeat themselves and are great areas to mark off when trading. I mark these off every single day when I'm trading and every time before I take a trade, because I would need to know where these are. Now, when price comes to mitigation level, it is expected for there to be some type of resistance or support at that level. A mitigation candle, you can either expect a new mitigation candle, an order block, or consolidation. Keep that in mind, please. Mitigation levels are great levels for taking profits or partials when trading, because that's exactly what the banks are doing. All right, but they can very well do a reversal and clean out, you know, take out all their profits and then put in majority sells and just, you know, reverse it back around. But keep in mind, this can happen either way, you know, going up or down when it comes to mitigation candles. But here, we'll look at some examples real quick. All right, so let's go ahead and look at some live mitigation candle examples. So let's go ahead and start with this mitigation candle right here. Now, this mitigation candle, once you're looking at it, you can see that it actually ended up creating another mitigation candle right here. Because once again, what a mitigation candle is that they're taking profits at this level as prices continue on. Now, these levels do repeat themselves as some type of with some type of use case later on, whether that being for them to take profits or to add on more. So over here, what they ended up doing was they bought, you know, they took their profits here, bought all the way up. They started selling down, and as they got to this candle here, they did the same thing and took partials, and then it sold right back through. Now, price did end up buying up through there, because you have to understand, it's not always going to hold. Like, it's like levels are like rules. They're meant to be broken at some point in time. Like, that's just bottom line. Like, levels are going to be broken at some point in time. But as we come back through to this area, as it did a pullback after breaking it, it ended up creating a order block right here. Okay. So let's go ahead and continue to look right and see what ended up happening more. Over here, we have another order block being created and another order block being created, showing heavy signs of rejection to then go ahead and go back under. Now, when you're looking at this area right here, we actually have another mitigation candle right here, which is actually really interesting. I want to go ahead and show you guys this. I'm going to put a box around it. This right here, we ended up seeing consolidation. Okay. The reason why this happens is because the market, what they're doing is they're buying up from here, they're putting in their orders, all right, and now they come up to take profits. Now, as they took their profits, what they're doing is they're finishing up cleaning out all their orders. They're cleaning up the rest of these buy orders with sells, all right, and then when they get out of the sells, they have to buy. And right now, what they're doing is building up liquidity on both sides. So when this consolidation happens, you have to wait to see for when it breaks out of that zone of how it's trading. And then just like how it breaks out of that zone, the box, it ends up pulling back to that box at some point, and then you can get your sells back down. So that's how that mitigation candle ends up playing out with consolidation, and how you can play it when it does go into that consolidation. You have to be patient and wait for that breakout, because all it's doing is sorting out which way it want to go. You know, it's like the change of guards. Do I want to buy? Do I want to sell? Just let the institute, let the market tell you which way it wants to go, and then just ride the wave. You know what I mean? You don't need to create waves in this market. Trust me, it's a $7 trillion market. There's no need to try to create waves. Now, the other thing I want to show you guys is that with mitigation candles, when you're looking at them on a higher time frame and then you go to a lower time frame, you're often going to see more market structure, because what that is an actual pullback in the market. Okay, that's what people often call them. So let me go ahead and show you guys this one right here on the 4 hour. Let's go ahead onto our 4 hour real quick. All right. So as we can see here, this was all just bearish movement, and then one blue candle, one bullish candle, and more. All right. But we actually see some type of development here. So you can see here, like, it actually had that level of resistance where you see it keep wicking out and wicking out and wicking out, and it had that extension down past it, pulled back to it again, and then finally it had a full engulfment right there to create a new order block and push down. All right. So that's another way that you can be able to use these high time frame mitigation candles in knowing what's going on. All right. Now, same thing can happen, you know, it'll kind of get more advanced for you guys, as well as like you'll start to see formations like two candle and 3 candle formations, where it's small consolidation into the opposite direction, and then it gets mitigated by buyers or sellers. So let's go ahead and pull up a small example of that real quick. So over here at this, okay, let's look at this right here. Right here we have all the sells coming through. Now with this right here, when we look left, we can see that this is a very powerful level. We actually have an order block right here. Okay, and so this rejection was expected. It did not create a new order block right here, but this final candle right here ended up still mitigating it. We could have seen this coming because of this area right here where all this mitigation is happening. All right, all this mitigation, all this consolidation is happening right here, but also importantly right here too. Pay attention to that. This consolidation right here made this 2 candle mitigation formation. This is something that is a bit more advanced, but as time goes on, you'll start to understand that and notice these things happening more often. Over here, we actually have another mitigation candle right here. We look to the right, we ended up having an order block created. We look over here to the right again. Once price came back to that same level, we had a new order block being created for huge push-ups. So like, once again, these are just very important things you want to pay attention to in the market when it comes to these mitigation candles. Definitely hop in the live sessions. You'll be able to see us use these live. If you guys have questions, please reach out as well too. But until next time, see you around. Peace.